joined from our Melbourne studio by Dale Gillham. He's the Chief Analyst at Wealth Within.
Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale. Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to Wealth Within Live, the Australian stock market show where you ask the questions and we give the answers about all things investing and trading. Tonight we're going to explore the biggest challenges traders face. We'll also delve into the biggest mistakes traders make and when buying and selling. And then what we're going to do is we're going to look at what's happening on the Australian stock market last month and give you our thoughts on where it's going and where to find the best opportunities coming up. We'll also analyse stocks that you've selected, answer your questions, along with a whole lot more. Hello, I'm Dale Gillham, and joining me tonight is Janine Cox, and we are Australia's most trusted stock market educators.
Hi everyone, and it's another great show tonight. Before we get into things, remember the chat box off to the right of your screen. So get typing your questions and we'll get to as many as we can. Now first up tonight, we're going to take a look at the Australian stock market, what it did last month and what we think it will do in the coming months. So let's get onto the charts, shall we? You can see there on your screen shortly the All Ordinaries Index. Now, looking at that on the left-hand side of the chart, we've got the monthly chart, as we always do, and we have a number of bars up there. You can see, okay, this month we're actually down from the high. The market itself hasn't been able to break that May 2019 high so far. Now, this could be the start of what we've been expecting. We were waiting for the market to pull back, and it only pulled back for 3 weeks in March. We thought maybe March, April, we might see that happen. We had about 2.5 weeks down here in May. So far, only an inside bar there last week and then a down bar this week, which is a good start. Let's just have a quick look at the daily. Really strong moves down there on a couple of days, but let's just consider what the range is before we get too excited. As you know, I've said on previous shows that the media can get carried away by moves on the market, and we've had 1.25% down. That was yesterday on the market, probably one of the bigger moves of the lot. But when you're looking at that in the scheme of things, especially as far as how high the market has been running and how fast it's been running, it's really not much at all. And come from the high, let's see how far we are from that top. About 2.6% down, which is really a minor move in the scheme of things. So far so good. Everything's running smoothly with our market. There's no big overreactions to any news so far. It's just steady as she goes at the moment, Dale. And I think that the market may have another week down at least. It could still go up and push higher. However, often what happens into this time of the year is we get a bit of a sell-off on the market. And especially portfolio managers, what they tend to do is they're setting up their portfolios in July, so selling off stock, and that's probably the biggest percentage of the volume on the market. And then into July, then we've got re-establishing portfolios and setting the scene for the second half of the year. So, but look, a lot of people get caught up in the end of the financial year.
They do.
Theory about that you should sell your stocks, but it's actually that theory about sell your stocks in May and go away.
Yeah, that old thing that used to be around.
Yeah. Well, that is really old, like Dale's just said, because that came originally from the UK and it's like really old. And it used to be to do with what the farmers needed, and then the US sort of took all that on, and Australia took that on. But there's a lot of volatility that happens because stocks are being sold off in the US now, so it's sort of being taken over more in the US at this time of year.
They've got a different financial year than we are. Theirs is calendar year, ours is July to June, so it's a little bit different for us because of our tax system. But that whole selling may go away. It was all about they'd have their holidays going into June. It's their summertime, not ours. And so,
but they'd also get ready for the second half of the year, so they'd sell off stock and then they'd be ready and waiting in the second half of the year. But I think it's all brainwashing.
It is a bit of brainwashing. Probably the only thing that happens this time of year is some of the tax sort of, I'd say, minimisation type strategies where people sometimes, sell off a couple of stocks for losses to offset tax bills they might be getting, so working with your accountant. But we're not talking about massive amounts of selling. Other people will then also prepay interest on things like margin loans or get options and pay for options to forward bring interest in to offset taxes now and claim tax deductions in this financial year. There's a whole range of things your broker and your accountant can help you with there, but again, it shouldn't increase volatility too much on the marketplace.
I don't think so. Look, we had a question today about our education and whether they could actually pay for it before 30 June and then claim that on tax, and that's a good question for the accountant.
They can enter education any time of year and still claim it on tax.
But some people liked it. It's amazing how many people do that before the end of the financial year.
They do, but it's not the reason why you do our courses for the tax from that point of view. But pretty much my thoughts on the market were either it's just going to go for a bit of a short while and come down into sort of July. I know July's sort of a bit of a pivotal month, but we can be going down in towards July and then go right up for the rest of the year. It's almost whether it's a little bit up now and a bit down, or little bit down now and then up for a longer period of time towards the end of the year. But I think both Janine and I agree that the market's going to be higher within the next 4, 5, 6 months than what it is today. It is more bullish. So, but
now, do you want to move on from that now?
Yeah, we've got a whole lot of questions and things like that.
I like a good question.
You like a good question. I forgot to tell everybody saying, there was a comment saying, welcome back, Dale, you've got your voice. But I thought you had a girly type of mask. I got a man mask.
He had to outdo me, didn't he?
I got a man mask here, guys. So if I do start
and you know
coughing,
what? He didn't tell me he was going to do this either.
This is
you're going to put it on.
You can have a zombie apocalypse and spitting dragons, and this will protect you. I guarantee.
That's awesome.
So I've got it handy for
myself. Is this a
myself.
Traders 101 essential kit item?
This protects you from your rampant wife.
Yeah.
So it does a whole lot of things. So don't you worry about it.
And it'll protect me from your germs.
It'll protect you from my germs. So.
Okay, so the next thing you were going to talk about was a question. So I'm excited already. So you're going to tell me why I'm excited?
Because I've got a poll, another poll. I know you like my polls. I mean, that's what we do. So, but the other week I asked a question, my biggest challenge in trading is. Yeah. So that was the question that I asked in the poll from a couple of weeks ago. Now, the responses were...
Can we have a look at that image now?
Well, then, no, Jack's doing it. He's okay. You don't drive the program. Let the guys do that. So the responses were the 26% that consistency was one of their biggest challenges. 20% said buying at the wrong time, 20% selling at the wrong time, or they just don't know where to sell. And the last 34% do not have a solid plan.
Yeah, that's a big one, isn't it? So what a great question. And looking at the results, it's not surprising that we find every trader who calls us to find out about what we do raise these same issues.
They do.
But really all of them can be rolled into one big global challenge, and that is a distinct lack of knowledge. So that's a nice challenge for us to have, isn't it?
Well, it is, and that's what I find. It's people like, I think I've got this problem, or I think I've got that problem, or I think I've got that problem. But when I speak to them on the phone, I know that happens with you too, speaking to these people on the phone, it's really just a little symptom.
Yeah.
And so it's like I had last week. I had a bit of a cough, but I had a cold, and I wasn't, fantastically healthy last Tuesday night. But you get symptoms, and then it gets worse and worse and worse. And all those things, all those challenges that people have are just symptoms of a bigger issue. And the bigger issue is lack of knowledge, and distinct lack of knowledge, because you don't know what you don't know, and people think they understand how to buy, but I don't know, 99% of people that tell me know how to buy, when I start asking them how to buy,
they don't know how to sell.
No, they don't even know how to buy. Just because you can place a trade or place a buy into a broker platform to me is not knowing how to buy.
That's not trading.
That's not trading to me. That's, to us, knowing how to buy is knowing all the other process before you get to that point. A solid process that knows you're buying the right stock at the right time that fits your portfolio.
So it's doing the money management, doing the analysis on the big picture and the smaller term time frame. It's
about
doing
being congruent.
Determining your rules.
Yeah, I was being
having a plan documented before you actually trade. So before you press the button, it's all there.
Yeah, today or the last few days, I've been working with a trading mentor student backwards and forwards on exactly this. You know, and working on buy and sell rules and everything else. And he's been telling me what he had, some of the stocks he had prior to doing the course. And I said, but what you're doing is you've got stuff that's incongruent with who you are and what you're trying to achieve.
Okay, so he's hanging on to that.
Well, no, he had stuff from the past before the course, but some of the ways he wanting to do things were hanging on to bad habits. And that's what I said, what we've got to do is clean up those bad habits. You've got bad habits that you've got and you're hanging on to them, and that's incongruent with what you're trying to do and what you're trying to achieve. And when
so
I explained it to him,
conflicting with what he was being taught.
and he was getting inconsistency.
Okay.
And we find a lot of traders do that. They sort of learn a few things on some crappy YouTube videos, or they might have attended a weekend workshop or something, and they got this bombard of this stuff. And then they try and hang on to this because they've spent time or money trying to get it. But if it's wrong, it's wrong. You know, just clean it up and move forward into something that actually does work. And that's really what I was saying to him. Follow the rules and strategies and structure that's in the course that we've given him with Trading Mentor. But also stuff that's in my book, basic stuff that's in the book, my portfolio management, sticking to that sort of stuff. Now, with that poll, we also got a comment from Steve. Now, if you look at the poll, and Steve said, what it is that we think we have a plan, or what is it that we think we have a plan, and that is the way we buy at the wrong time and sell at the wrong time. Planning is what you do before climbing up a cliff, so chances of getting to the top are more likely. And I thought that was really, really a good, wise comment by Steve, you know, because it really is. Planning is what we do before we get to pressing the button of go on in terms of buy or sell. And it's the same as like your footy team or the 100-metre sprinter at the Olympics. Everything they do is before they put the foot on the line or they walk across that white line under the
we
footy
only
field.
see a short, few minutes of their efforts, don't we? And then think, oh, how great is that athlete, when in reality he's been training for years to get to that.
Well, it is. It's those 5 Ps. I did say Ps, good. 5 Ps. Planning prevents piss poor performance.
Did you have to?
Well, I don't know, but that's correct, and that's what Janine and I spend most of our time preparing to trade. The physical pushing the button and going, picking a stock like, ABC, click, and then go. That's what most people do. They sort of think, this stock's, got a report out that it's drilled here and this is happening. That sounds good, buy. That's not planning at our point, and that's not buying.
The other thing is too that all of those points that they raised, all of the I guess they voted for in the poll, it really comes down to the knowledge, but whether the last one at 34% was trading plan, all of them are about the trading plan.
Correct. Nobody has
the buying, the selling, being inconsistent, that's all about the plan.
Yeah. And without being rude to people, I find when I see comments a lot on Facebook or YouTube, those sorts of things where traders or perceived traders are talking, people's ignorance come out really quickly. You see in their comments and how they structure their comments that their lack of knowledge and ignorance is there, and a lot of people, like I say, they overestimate their level of knowledge in the marketplace. And so the big mistakes we find people do is, number one, lack of knowledge. They don't know how to buy because they're guessing most of the time. They don't have a solid strategy. We find people trade the wrong stocks all the time. Time and time again.
We've talked about it on the show.
We've talked about it on the show.
Stocks.
And it gets me that when 2 experts are saying to you, don't trade crappy spec stocks, we still get a lot of people telling us or asking us, what's your opinion on a crappy spec stock?
Yeah, so it's like trying to pick a winner at a race or something.
Yeah, and it's really, correct. And I don't understand why. It's like people are quite happy to, if their car's not working properly, take it to a mechanic rather than fixing themselves. But when it comes to buying and selling stocks, they go, yeah, I can do that, but they don't have the knowledge to do so. And yet, what's more important? Just your car running a bit rough or your financial well-being? And to me is, if you're going to play around with your financial well-being, you're not going to have any financial well-being when you retire. You're going to be financial survival mode.
Yeah.
And that's what we're seeing, you know, most people retiring on some form of pension.
And we don't want you to be in that
No,
group.
no. Now, I know when people make an inquiry with us, like, some fill out that 60-second survey. Now, some of you may have done that so that, you know, hey, can I have some information on your course? They fill out a 60-second survey. And so what happens is when they fill out that survey, we get answers to lots and lots of questions. So, and they pretty much all have the same answers all of the time to the same questions. And I'm going to give you a couple of examples of actual answers to questions in that 60-second survey. Now, one of them said, one of the latest ones says, my trading plan tends to give me lots of little losses. When you have lots of little losses, that means your stop loss is too tight.
Yeah.
Always. That means you're afraid of losing and you're trading to not lose rather than trading to win. Huge sin that we see a lot of beginner traders do.
It's making the broker rich.
It's making the broker rich because they see a stock move up into profit and they go, oh, get out of that. But then when they have all these losses, it starts to move against them and they get out thinking they're going to lose more money. But that means they don't have a solid entry, and that's what we mean by most people don't know how to buy. The person goes on to say, I know how to buy stocks. Again, as I said, to me that's an ignorance because he doesn't
That's just pressing
know.
a button.
That's just pressing a button. He doesn't know how to buy because he wouldn't have little losses if he did. But I have trouble working out where to sell. Most people do because they don't have a strategy to manage the stock once they get into it. And he goes on to say, I need to understand how to analyse charts and stocks properly.
It's good that he's realising that at this point, isn't it?
And that's why he's asking about our education. And here is another comment on same question. My trading, a different person, same question. My trading plan tends to give me lots of little losses. I seem to get stopped out of a lot of trades. Exactly the same situation. He's buying the wrong stocks, stop loss too tight because he's trading to not lose. And in not wanting to lose, he attracts more losing.
But if he's saying he's struggling with his psychology, he's probably not even following rules anyway.
Correct, and that's where he's saying, I'm struggling with my psychology, I need more structure in my trading. That's exactly what Janine and I do. We clean up all of that. The structure, the strategy, the process, how to buy, how to sell,
absolutely.
We get it all happening.
All of that leads to the answers that you got in the survey, which is interesting.
I know, it's same all the time. And it doesn't matter, like we've been doing this, I've been teaching traders for well over 20 years now. And it doesn't matter whether it was the 90s, the noughties, they say the noughties, or it's now, it's the same responses I get from people over and over and over and over and over and over. It's people think that they can do very little to try and earn a whole of a lot, and they think speculative stocks or low cap stocks will make them more money. So there's lots of different things or challenges that people have.
Get on the right path
that they're making. So
at the right time for you. That's all I could say.
Yeah, and we're trying to fix all that for you and help you in this. Now we can only cover a certain amount in these live shows and on YouTube. Remember, this is a free thing that we're doing, and Janine, I'm giving our wisdom to you. You can only take that and run with it, and that's really your choice. So your choice is, I want to trade well, and I want to be a good trader, or I just want to be average with everybody else, or an also ran. And that's really your choice.
And even though I'm encouraging you to get into stocks, and I'm probably
you are.
Yeah, I'm doing the wrong thing there. But to me, I like the stocks as well. So I know you guys are out there enjoying that as well. But what Dale's saying here is probably actually more important than looking at a stock chart of a stock that you're looking to buy now or that you already have. It's to get your mindset and your thought process right about how you're going to keep going and be consistent and be able to buy and sell with confidence and have a trading plan that you actually know works because you've tested it.
Imagine I'd like to trade with confidence.
Look,
I'm not saying you need to imagine. I'm just asking these people to imagine, the viewers, because I know what you know like to trade with.
Look, there's some of them out there who are trading with confidence. However, when the market has the next big correction, that
they don't know what they're doing.
Sorts it out. Yeah.
Everybody's a hero in a bull market. So, but I think it's time we have a look at the chat and answer a few questions.
Let's do that.
And then we're going to have a look at some stocks that everyone asked us to look at tonight, because that's what we're here for. Now, I know we had some stuff on there was a bit of issue in this earlier with the link to the video that was wrong, and there was a few people on that. There
sorry
was a
about that if you got
question
stuck
on that. And one person was asking about if you've got a stock that's keep making new all-time highs like ASX and DSX or DSX, Dexus property, I think it is.
How do you analyse that?
Yeah, how do you analyse that, and should you be looking at that? And he also said that I talk about
a really good
having
question.
a stock, if you pivot a trend line 3 or 4 times, that the top's coming. How do you actually handle
Actually,
that?
when some of our traders start the course, that's one of the things that I get asked quite a lot through the email support.
So we want to go to the charts. We'll have a look at the charts of DSX and the ASX.
Okay.
And we can have a little bit of a chat about it, and then I'll have a little bit of a look at
Then
the
we've
chart.
got a question from Steve Otts, is it?
Yeah, and then we've got a
After
Steve Ott's question about Newcrest.
that? Okay, so looking at Dexus. And you can see here, it has just stunningly gone through that all-time high. Compare that to some of those small stocks that you might be looking at. I mean, this has done incredibly well. And this is where looking at some of the sectors can really help you. But Dexus has done fantastically. Now, when we're looking to assess a stock through its all-time high, a lot of the analysis we apply can be, we can use all sorts of ranges on price charts and time ranges to come up with a theory. So it's no different to analysing what is below that. Say, for example, this high here, this was October 2007. When we're looking for important levels, we can also project these important ranges that we find on the chart, and you have to know how to identify those into the all-time high. So I showed you an example last week where we had a number of clusters on a chart, I think it was EHE. Now, those can be actually projected higher, so you can look for levels overhead to determine how far the stock is likely to run and where it's most likely to turn. And it actually works with an uncanny repetition. The only thing is that the number of ranges and levels that you can use below the prior all-time high can be greater, so you've got more levels to look at. And in actual fact, it might make it simple for you because there are less levels overhead. So we'll be using everything that we know. That's what Gan said, use all you know all the time to determine where a stock is most likely to turn. So I can't show you on this forum, you know, the absolute detail of how to look for these levels exactly, because it's more part of a, you know, detailed research. It would actually take too long, and Dale would be telling me move on to the next stock anyway.
Correct. So,
but I'm just giving you a description of how to do that. And look at ASX as well, how that's gone through its all-time high as well. Not all stocks have on our market. Even the big miners are still lagging behind. So we would have a whole lot of levels across the chart that we'd be watching as the stock was rising towards the all-time high, including an all-time high, because often stocks can pull back. See how there was this resistance around here? The stock really struggled for a couple of months to get through that high, and then eventually blew through and pulled back. And stocks will often do that when they go through their all-time highs. So we would have levels overhead to do that. Now, when you're first learning how to apply the analysis, even some of the students, when I'm looking at their work, they might say the stock, for instance, is at this point here in June 2017, well below that high. They might stop their analysis at the all-time high. And I'd say to them, why would you do that when, you know, this stock could go through the all-time high and then you're not prepared for the most important levels where the stock may turn when it does go through the high. So that's the thing that I would say to you about that is, yes, there are definitely rules there. Now, did you want to talk about the trend line one?
No, we've talked about that a little bit, and I talk about it on the Trading Mentor course all the time, and I actually show people on actual stocks how it actually works. But pretty much it's just the momentum. When the momentum gets too overheated, there's a way of working that out quite simply. So it's just accelerating. And it's not something I can do in a minute or so on this forum. In this type of
what you're actually saying is that the angle of the trend changes.
It just keeps increasing and it accelerates too much, and then the stock becomes overheated. So where can you find that out, and how do you know when the end of the trend is happening? And they're all little things that we need to talk about. It's like I was saying the other week, when somebody asks a question, sometimes you need a lot of backstory for that before the question makes sense. Yeah. You can't just answer that one question.
But you can do everything that he's asked about. Which
we can, from that point of view. So what I'm going to do, so what we'll do is there's a couple of questions on here. So I've got some stocks down on here, so you're going to type those in. Yeah. And there's a couple of really good questions we've got for some people.
Some good stocks on the list.
Really, so any of those of you guys who've actually put in your stock codes, we're going to cover all of those for you. Callum says, hi Dale and Jane, found your channel a few months ago, have been enjoying your videos and live stream, also read your book, just wanted to say thanks. Welcome to the channel, Callum, thank you very much. Barry says, g'day, Lucky Three Kings, he wants Macquarie, so we'll look at that as well. Should be looking instead of some small caps, what are your thoughts? Mick King says, welcome back. Dale, his voice, and Janine, thanks Mick, good to see you back again. He wants A2 milk and another one. Benjamin said, good evening. There was a question. Where was it? Evening, guys. Great show. What characteristics do you look for in a business that suggests it's a long-term hold? Janine and I aren't really, we're not fundamental analysts. We're very much more technical analysts.
Monthly chart.
Yeah, and this is a question from a gentleman called Brian Coombs. Now, what we look for in a company for more longer term, we don't hold things long term. Our long-term trade for us is 18 months, sort of 9 to 18 months, and we'll never hold things long term, and we're not buy and hold.
And why is that?
And the reason why we don't is because with stocks, and the market's the same, basically in real general terms, the market and our stocks rise about 2/3 of the time and they fall about 1/3 of the time. So roughly what we do is we exit that 1/3 of the time and then come back for the rough 2/3 of the time. But you see stocks will trend for sort of 12 to 18 months, sometimes 2 or 3 years, and then they'll fall for a period of time. That's why our trading's like that. So what we're doing is we're smoothing the dips out. So if you have a move up and there's a dip and then there's another move up and a dip, we take a lot of the dips out. And how that works is that you might have a linear line on your portfolio moving, and what happens is when the dips happen, your portfolio takes the dip where ours just keeps going and stays. It might flatline a little bit, but then when the market moves up, ours keeps getting higher and higher and higher. So the gap between a buy and hold portfolio, one that's actively managed, more medium term, grows and grows and grows with every dip on the marketplace. So what do we look for in a stock for more longer term buy and hold? Absolutely, things like double-digit growth in EPS. We look at those sorts of things. It's got to be earnings per share and making more profits. It's got to be paying dividends in most cases, even a small dividend.
We do look at the PE as well because, I mean, that could be a criteria to filter out stocks in the portfolio depending on what criteria you set at the start. So that this is all that process that you need to put in place.
Buy and hold, longer-term portfolio of stocks, they would tend to be more top 50 stocks that we would look at in that. Not so much outside that. We definitely wouldn't be anything outside the top 100 for that. Always in the top 100, but more likely the top 50 stocks, the biggest stocks on the marketplace. Things that are in industries that are more growth, more sort of like healthcare, those ones like you said,
it depends on the person as well because you've got to be able to tolerate that roller coaster ride.
Yeah.
Because as we showed you a couple of weeks ago as well, we had Boral, I think, up there. We had Brambles, and we showed that even the banks, will fall and fall significantly at certain times.
Telstra.
So you can't assume that's not going to happen.
Yeah. So why don't we? And then there's a couple of other questions. So you're ready? You've got all those all up. Benjamin Young's calling me Dale Vader. I think that's because of my mask.
Oh, that's awesome.
Here's a really good question. So I think from Shreyas Kale. I'm new here and don't want to lose all my money into this trade while I'm learning. Can you please recommend top 5 to 10 stocks I should monitor before I decide to buy? We're not going to recommend 5 to 10 stocks that you should monitor before you buy. We're always going to say preparation, like we said before, the 5 Ps. Learn what you're doing first. You don't need to get in the market today. What you need to do is learn what to do before you get to the market, to be ready for it. So I would rather you read my book first and understand that. Paper trading, I was chatting about this with a lady in California only today. I said, her husband's passed away recently. She's used to having him to bounce ideas off and not confident. She said, but how do I do this? I said, grab my book, because you'd already have it in my book. I said, just start putting it into practice and paper trade for a while. So grab the top 20 or top 50 stocks and start paper trading them based on the rules in my book to get your knowledge and confidence up.
Top 50 is probably too many.
Probably too many. Maybe the top 20, that's it. And just using the rules in my book and just start to get to know it. And
that's
as you
what
get
I
more
did
confidence...
when I started out. I just in those days, I didn't have a computer. I hand drew everything.
Yep, so did I.
And so it was top 20 stocks, and that was a big job to get that up and running as it was. 20 is more than enough for a person to start with, 20 stocks. If you're looking at more than that and you haven't even got the knowledge, then I think you're crazy.
Yeah. When you see kids with crayons, and they end up with all over them, that was me.
Right.
I was charts with green and red and blue and black.
You made a mess.
I just made a mess.
And you said
everywhere.
my charts were messy.
Okay. We have to do that. So let's get into
some AMI is Aurelia Metals.
So we're going back to the charts now. So we're back
to, is it TTING?
TTING, yes,
yeah,
TTING.
so TTING, good, interesting stock there. Looking at the volume though, let's check it out. One of the first things to have a look at. Okay, volume looks all right. We've got something down here about 40 million a week, but look, it's only it's trading at less than $1. So, but even still, for an individual, that's probably a stock that you could manage and find some good rules on. Now, looking at it, we can see that it got to about $1. Stocks go into a new category when they get through the dollar mark. The fund managers look at them differently. So that's something to think about as well. But it did actually trade back to an important level at around 50 cents. So I can see that as being an important level. There is more support for the stock actually. If you look at the history, probably somewhere lower down at around 40 cents. I'm not saying it's going to fall to that because it may find support here and move back up. But on this month's bar, it's trading around the middle of the zone. It's looking like it's trying to find support, trading sideways. It's not a stock I would even look at buying, but if you were holding it, then you'd have to have a serious plan ready. And we don't give personal financial advice on the show, so it's something that you need to think about. But I can just say to you that I would not be wanting to buy that stock right now. I wouldn't be holding it. But if you're wanting, it does trend well. Like that's one of the things when it does get going. So a nice trending stock could work well with different strategies that we teach. So trend lines being one of them that's in Dale's book. So there's my thoughts on AMI.
So let's go to A2 Milk. That's by Callum. And Mick King also wanted A2 Milk. But Bellamy's has been down lately.
Yeah,
last few days, but anyway.
It's been down a long time. But look, I mean, looking at A2 Milk, that was probably... you know, doing so well, and look, all of a sudden the profits wiped out. So this is why you've got to have really good rules and understand the stock.
So right now it's a stay out. That's
well, there's an exit right here. So you could have been out, you know, depending on what rules you used. If you were smart about it, then you'd be out. But at the moment, what's happening is China's going through a process where they're you've probably heard about this as well, Dale. China's going through a process where they're looking to be self-sufficient in the powdered milk area, like for
self-sufficient by them manufacturing it or them buying it in? By
actually producing it. So they're looking, I think they said 60%. They were
Chinese people don't trust the Chinese people.
But that's the thing. So that they don't trust their manufacturers. And I was reading something today that said 40% of the land in China is polluted.
So I'm not sure how they're going to do that.
I don't know how they're going to convince people of that.
Right now, this and Bellamy's will stay away.
Yeah, well, look, right now it's down, so you know it's showing plenty of reasons not to be in it at the moment.
Okay, so DTL is the next one, and that Mick wanted that one. He also wanted Telstra, but might have a bit of a look at this one. Looks a lot better, doesn't it?
It does. Look, looking at the volume, let's have a look and see what it's got. It's really low volume though, so it's obviously tightly held. So it's under 1 million a week, and generally we would say to students, look for something that's got over 1 million units a week. I mean, in dollar terms, it still cracks that mark, but that's a really small stock.
It is a small stock.
Surprising that it does look quite good.
It does look
in terms of how it trades, but yeah, it's trending up nicely. If I was holding this stock right now, I'd probably continue to hold. Support exists at about that $1.70 mark, so as long as it's sort of pushing off from that level, it looks nice. Okay. So maybe go through the all-time high. We'll
let's look at Telstra now. Quickly, and then we'll go back to the question.
Okay, Telstra's moved up really nicely.
Isn't that looking nice
it's looking good. Like Telstra's actually done well.
I didn't think
recently.
I'd ever say Telstra was going to look good.
No, because you did say it looked good, but you said it was a dog stock for a long time, which it was.
For about 10 years,
yeah. So look, maybe it's not going to come back and fill that gap at all that's on the weekly chart, but normally that's sort of unheard of on a weekly chart for a stock like this.
So this would be an example of more of a long-term buy and hold stock that we're talking about.
No, because we just said you couldn't even buy and hold long-term Telstra.
Yeah, but no, I'm talking about in terms of a nice steady, that sort of stock. Cause
definitely.
Right now it's probably starting a nice longer term, because that move up from 2010 went to 2014.
Well, what you're saying is just to put it into context, right? Because people take you out of context all the time.
They do, don't they?
I've spoken to a few people this week about it. So what you're saying is that when it gets into a nice trend, then it can be in there for the long term, but not always, because look at the rise from September 2006. It only rose into June 2007. Didn't quite meet our criteria for long term.
Yeah, it didn't meet it.
Same as here, March 2003, moved up April 2005. There's a couple of years, so that sort of fits the criteria, but really didn't. But it has had a couple of good trends, so 2 really nice trends over the history, and this might be the third.
It could be the third. All right, so let's go to the question now. We've got a question that somebody sent through.
So Steve,
do you want to cover this?
Finally we get to you. Hi, I'd like you to look at NCM, Newcrest Mining. Should I speak in a deep voice?
You can speak in your newsreader voice if you like.
I'm looking to buy this over the short to mid-term, and I've been keeping my eye out on this and had been trading sideways for a good number of weeks before making a move and showing support around 26.80. It looks like It has some blue sky ahead, and we're going to have a look at that.
So Newcrest, so
So
bring
that's
that up.
Newcrest.
East NCM. So you don't even have it on your screen.
Okay.
So let's shove it up on the screen. Now, I like the way he phrased that question. I mean, he's thinking about it. He's thinking about support. He's thinking about prices. He's thinking about direction. And that's what we like to see people do.
Yep. Big
So
gap
often
there.
we get comments of people going, just look at this. And it's like, well, do you own it? Do you not own it? What are you thinking about? Why do you want to own it? And you really need to ask yourself, if you're saying, what do you think of this? What kind of knowledge you have right now, and how much risk you're taking on the marketplace by not knowing. As I said, it's sort of like, we all go to the mechanic to get our car fixed, but we're not giving ourselves that same respect in how we're managing our own money. So what do you think on Newcrest?
Look, I mean, it's gone through this high,
wow,
so
look at
therefore it's continued the long-term trend from that low.
Looks nice.
It has a checkered history, but gold's actually been going up, so Newcrest has done well out of that.
Yep.
It's just kept rising, so it's getting
It's
to an
broken through
important
that
level.
sideways bit, hasn't it?
Yeah, it's broken through that sideways.
That's nice, and so there's some fresh air.
Yeah, but look, it's gapped up, so often you can have an exhaustion once the stock breaks through that temporarily, and it might come back and test. This could actually be the test, the sideways move, but often...
Do you want me to explain that?
The sideways move?
No, the gap up and the exhaustion.
Oh, yeah, go for it.
Well, only if they put their hands up. Do they? You want to...
No, look, just explain it anyway.
Okay.
It takes too long to get that feedback.
It does. Basically, when you see resistance or support levels, and you'll see price hit up to a resistance level or fall down to a support level, people sit there below it or above those support and resistance levels, and it catches beginner traders all of the time. Because what happens is there are people sitting with buy and sell orders depending on whether
Yeah, they don't want to buy it at the current price. They want to try to buy it lower, so they put the bid in as low as they can or think that might work.
They penny pinch.
Oh, I won't buy it until it comes back to this level. We actually do the complete opposite. We wouldn't buy it if it was falling back. We'd be looking for the momentum back into it and the money to be behind it before we decided to get in.
Yeah, but there's lots of buying or selling above or below these levels.
That's the penny pinching you're talking about.
That's the penny pinching, yeah. But with a lot of buys and sells above them below these levels, what happens is when they break through, all of a sudden, bang, all these orders hit, and it shoots it up or shoots it down, and the vacuum sucks it all up and exhausts, and then all of a sudden what you'll see is it reverses back over the next few days back to that level again. That catches beginners so often it's not funny. And it's really easy to get around those things and have strategies around that so that you don't get caught in those things. But we see so many traders or would-be traders get caught in it. It's just a
Or
bit
it
more
can
knowledge.
be part of a move that's not like a big exhaustion like that, where it's actually a real legitimate entry.
Absolutely.
And so then the inexperienced look at it and they think, oh, well, I won't take it because it's just moved up so far, but they're not considering what they need to, which is looking at the upside and whether the stock still has the potential to continue to rise, as well as considering the downside risk. They're just thinking, oh, well, it's gone too far now. But how much is too far?
How much is too far?
But if you don't know how far a stock's likely to run to, because you don't have the proper knowledge on the analysis, then you can't make that assessment.
Yeah.
So did you want to talk about something else?
We've got another question here. Nicholas Kane says, hey, Dale, what's your thoughts on the big four banks and the banking sector since it's been a few months after the Royal Commission? I don't have any banking stocks of yet. So we don't need to look at the banks because we've looked at them last week or the week before. I think just a general opinion on our banks, and then we'll go back into some more stocks.
Yeah, that was Nicholas, and we had also had a question on Macquarie, which we're going to treat
and Bank
separately.
of Queensland, so we'll look at those as well. But really, at the moment, I think our opinion on banks is still a little bit too early. They're still, whilst we're a bit further away from the Royal Commission, things are washing out, and obviously the interest rate drop today will affect the bank somewhat. But CommBank is our preferred bank if you do need a bank in your portfolio. And I hate saying, do you need a bank in anything or needing a stock? It's more about getting a stock that fits your portfolio and fits your style. And I was saying to somebody only last week, I said, you're trying to put stocks and fit them on, you've got it back to front. You're trying to just buy any stock and hopefully it fits into your portfolio. You've got to work out what your portfolio is first and then look at stocks that will fit that portfolio,
And
not the
people are
other
saying,
way.
well, how do I do that?
Well, we
You've
teach
got to
people
set
to do
criteria.
that. Yeah, we teach people how to do that with the planning and their preparation. So you're minimising what you're looking at and coming down into...
Makes it so much easier to
It's so
select
much
stocks,
easier
doesn't it?
and so much more effective, and your trading's more effective. You've got less stress, more profits.
Even just starting with a particular index is part of all of that. Like, Dale was talking about before, just stick with the top 20 for a beginner and, to reduce the field.
So right now we're not bullish on banks.
No, but do you want to talk about Macquarie and Bank of Queensland?
Yeah, we can get
in.
Well, we'll get into the next stock because we've done A2 Milk Telstra. So let's go into Macquarie. Lucky Three Kings wanted Macquarie, so let's go into that.
Yeah, it's actually on a nice decline. Now, we get excited when we see these sort of moves down because it tells us that we've got plenty of time. We don't have to rush. We can wait and just be that lion or tiger ready to pounce when this stock eventually comes back. But at the moment, you wouldn't be holding this stock if you were looking to do that at the moment because it's definitely down. So nice move down there. So how far has it fallen, Dale? Let's just have a look and see what we're down. Currently down around 16%. So, people would have seen this big rise and thought, woohoo, I've done fantastically well.
Who's the best
and don't
stock
ask me
after
to
the
say that
GFC,
again.
the best bank? It's outperformed all the other banks.
And yet it's wiped out all of that profit in just a few, like 5 weeks or 6
And
weeks
right now
or
it's
something.
bearish and it's probably likely to keep falling away.
Yeah. And look, if you knew this stock, you would actually know that it does that
Correct.
quite regularly, looking at this, a couple of months and that's it. It's wiped out, the last 6 to 12 months potentially, the gains on that. So looking at it, we'll wait for a better opportunity to be in that. So now, do we want to go on to the next one
Too
on
much
my list?
fries wanted that as well. I have a problem with too many fries sometimes.
I've got XRO.
Yeah, XRO.
So let's have a look at Xero.
I
Now,
love Xero. It's really nice.
Xero is another one
wax
that's gone to an all-time high. And look how it did a similar thing to the ASX. It actually took off, went through the $50 mark, pulled back for a number of months to test support, which is what I was saying stocks will often do. So this is why when we're setting these levels and working out where the stock may turn, we're always setting them into the all-time high. If a stock's making a run towards its previous all-time high, which was actually in March 2014, then we're already prepared for what's to come. There's no point trying to put the analysis on the chart after it's already run. So that's another one. Did you want to stop there now? Or do you
Yeah,
want
we'll
to
do the question now. Let's go to the question. We've got a few more stocks to do as well.
Yep. So we received a question around exiting a stock. A person asked, why don't we just get out of a stock when it reaches a certain price? And wouldn't that be a wonderful idea?
Another big mistake traders make, and that's what the theme is for this show, common mistakes that traders make.
Actually, we can talk about it. We can look at Xero and talk about it as an example of why wouldn't we?
We can talk about that. Just what we hear a lot of people do, and this is what we hear people that aren't good traders do, they set what they call profit targets. Okay, so if it gets to 10%, I'll get out. Profit, I'll get out. If it gets to 15%, or if it gets to this price, I'll get out. The golden rule of trading, and as I say to my book, and you may read it other places, is let profits run, cut losses short. Golden rule of trading, and yet most people do exactly the opposite. So setting profit targets is one of those. It's breaking that golden rule. Always, and people that set a profit target don't have enough skill and knowledge.
Buy and hold type people, but there's a lot of people on this show that are not buy and hold. They're trading short term, so they're actually setting the stops too tight, as we talked about before.
Correct. They set their stop losses too tight, but they're setting the profit. In part of the reason why they put a stop or an exit at a price.
How much the mentality is, how much do I want to make out of this trade, rather than seeing how far could the stock actually go.
Correct. They're afraid of losing profit.
Yeah.
That's the point. So it's fear, false enemy appearing real, false evidence appearing real. So they go, it's gone 10%, I'll just get out. But when you're selling a stock that's moving up, there's one thing I know when a stock's moving up is you're making money. Number one. So I know 100% certain you're making money. So why would you exit a stock that you're making money on to then put that money into a stock that you don't know is going up, and you're taking higher risk again? You've got more chance of making more money with a stock that's rising and letting it continue to rise than taking it out and putting it somewhere else. And the reason why people do that is because they fear losing the profits that they had. But then they're the same people that have a lot of little losses because they set their stop losses too tight, which makes them inconsistent in their trading, and they struggle with selling and they struggle with buying as well, although most of them don't know they're struggling with their buying.
Well, people who get out at a certain price don't actually have proper rules.
Correct.
That's the point.
They don't have rules at all.
They don't have rules that they can trust, because the probability of you being able to get out at a certain price every time varies so much when you look at the trends and how different they are on stocks. So it's about actually being able to trust that 7 or 8 out of 10 times, if you follow a particular buy and sell rule, that you're going to be able to exit. And a price target doesn't work that way. It's just not consistent enough to help you in that area.
Yeah.
So
I've got a lot of in my video for next Monday for the Australian market. I've got a couple of questions around that, so watch that one next Monday. So let's go back to, actually no, this month we have a great opportunity for you. So everybody go, yeah. It's exciting. That will get you right on the path to being consistently profitable in the market. So who'd like that? So put your hand up if you'd like to be able to be consistently profitable in the market. So here there are guys in our studio telling us, yes, that's what they would like to do. Now, as you keep telling us, you struggle with buying and selling or getting it right, and that's costing you in lost profits, as we just discussed, and it also costs you in lost opportunity. So how'd you like to learn how to determine when to buy and when to sell with the highest probability of success? And also how to create a consistently winning trading plan to suit what you want to trade. Now, imagine for a minute that what would it be like, or what would it mean to you if you possess the knowledge and tools to be consistently a profitable trader? So how would that change your life? So if you were consistently profitable, how would that change your life?
Now, you've seen how others have changed.
You've seen how we've changed people's lives.
I didn't think I was actually going to get a go. You were doing well. Do you want to read my bit? You've seen how we changed others' lives, and now we're offering you a special opportunity to change yours. So we got together and we're running an end of financial year special offer for you to enrol in the diploma course. Now, if you enrol during this offer, you'll receive not only the education in the Diploma of Share Trading and Investment, you'll get 12 months free trading support from Dale and I, plus 48 weekly issues of our stock report. And so every week we get together and we analyse stocks, but in much more detail than what we're seeing here.
That's an hour and a half just on a few stocks.
Yeah. So that's worth the tuition alone.
I agree. Now,
yes.
Remember, you also get with the course full email support from our really highly trained team of traders and assessors, so that they can work with you one-on-one, so that team of expert traders and assessors. But you also get access to online forum recordings. These are hour-long recordings where we're pulling stocks apart in huge detail, not what we do on these shows here, and we're using that Optimus software that we're using tonight in every single one of those recordings. But they also get extra data. Now, to give your trading a further boost, we are offering you a one-on-one session with Janine. Are you serious? Jeez, you don't come that cheap.
I didn't think you were going to say that.
Well, no, sorry, you're not cheap. You're expensive. So let me get this straight. They get a one-on-one. They get some one-on-one time with you. That's included in this special offer.
That's right. So we work through
it's priceless.
Everything, right from you setting your own goals and just giving you guidance on that, all the way through a process strategy.
So what, you give them a call?
Looking at your analysis. It's just done through the
Skype or call or something?
Skype usually, not Skype, or usually through our software that we use for running our forums.
Cool. One-on-one, face-to-face.
So you can log in
via the internet.
So I talk to you, and then we actually work together on the internet.
Wow, that's awesome. So awesome. I'd love that. So basically, how do they find out about it?
All you have to do is just contact the office to make the inquiry. There's no obligation. 1300 852 272
858
272 or email info@wealthwithin.com.au. Now, when you call, remember to ask about our interest-free payment option, which makes getting started on your journey to trading success even easier.
Interest-free. So let's.
Well, there's interest-free option, but there's also a loan.
There's
a loan option
payment
as well.
plan, and there's a few other different ways of people.
Yeah,
because
so if you want to pay an upfront deposit and get started that way, and
we don't
interest-free.
accept chickens and cows.
Yep. Okay.
Okay.
Or you can actually pay nothing up front and have get the lending, which you'd have to be approved for, obviously. But I just spoke to someone today who had actually gone down that path and got the lending, and he said he was really excited about that because
a lot of people allows them to get started earlier and get on their track a lot earlier, rather than having to wait 6 or 12 months to save up some money to do it. So, but we'd love to have you on board and really teach you to be a kick-ass trader. That's what we do, and we love it. We love watching people's journeys. So, but let's get to the chat and see what else we've got in terms of questions and everything else. So I think we've got, let's go to William Yago. I think he's got Lend-Lease he wants to have a look at. From there, and I'll have a look at the chat and see what we've got.
All right, Lend-Lease. Okay, looking at that, incredible. We've talked about this a couple of times actually, so this must be a favourite stock for someone. But I don't know if William, you have asked for this stock before, or whether this was somebody else.
He asks every week, doesn't he?
Some people, I think they try.
It's like Costa. Everybody asks.
Can we have an update, please? Yeah. Looking at this one, you can see that it is actually in a nice trend moving up. We've got a down week this week. Last two bars on the weekly chart. The closes are actually at around the same level, so it's showing that it's actually struggling to get past that level. Now, Often stocks, when they do that, they can trade lower. You just be watching this level here to see if it goes below that low, but that wouldn't be a positive sign at all if it traded below that low of 12.65. I'd be liking this stock much more if it actually managed to get through that high, which was in February 2019, so that's the high of this bar at 14.22. If it turns back and goes above there strongly, then that's a really good sign for Lendlease. AMP, did you want to talk about another one?
Somebody asked about AMP on comment on YouTube, and then I couldn't find it. I saw it briefly once, but AMP is looking like it's starting to do a nice little basing pattern.
We have looked at this one some weeks ago as well. It is actually trading down. Look, it was starting to look interesting here, and a lot of people might have tried to get in there. Same with this run here, but really, proof is in the actual rules, so it needs a strong entry rule here. And this is where you've got to be really savvy as a trader and not just try to take the first move up that comes, because that doesn't mean it's going to continue to rise. So always remember that.
This is one of those stocks that people have held for a long time, and as it fell away and fell away and fell away.
And a lot of people sold it through here.
Really decimated their portfolios. Too early. If you don't have AMP, stay out of it. It's too early. If you do have it, I'm not sure why you're still owning it, but your choice from that point of view. A lot of people, when they're like let profits run, cut losses short. Most people we see, they just let their losses run, and that's a real huge sin that people do. If you're losing on a stock and you're losing more than the stop loss of 15%, just get out and you make yourself feel better, because it really does work your psychology in a negative way. But the best exit you'll ever have is selling the first stock you lose on. The more you learn how to exit stocks that you're losing on, the better your trading will be. One of my catchphrases is, what you do not lose determines what you make. So if you keep your losses short, let your profits run, you'll make far more money. So somebody says that Mistakes Traders makes a good book title for me for my next book. So okay. I think I like that.
I think there's plenty of articles on the website if you want to have a look.
You know, with Costa.
Yeah, we were talking about that the other day.
Yeah, I think it's like I mentioned in my report, it's a bit of a takeover target. It might become a takeover target, because I think overseas interested pushing brokers and they're dumping it.
They looked at the books and then they walked away. And, so where's that left the family? And that's the thing.
I think there's a bit of they're pushing it down.
We're always sceptical, aren't we?
Oh, I'm very sceptical of this, because it's a good, well-run family business, and I think there's some, I won't say untoward things happening, but I'm just saying, watch this space. Might be some interesting things. So let's look at.
We've actually jumped to the end, and we've missed out on all the people who got in early.
We've done Lendlease, so we've got Gregory.
DCG.
We've done AMP, so we've got
Decimal Group.
Andrew wants DCG.
Okay, so looking at Decimal Group, you can see really good support across here at 86 cents, and right now it's setting up. Now, if this stock goes through that 99 or $1 mark, that's going to be a really nice sign for this stock moving up, but it's got to get there first. It's trying to do it. The pullback here was really good to see how far it came back. It came back to 83 cents, and that's a good sign when a stock pulls back actually much less than it rose, but it still has a decent pullback. So notice how it's had actually 2, 3, 4 weeks down, and then it's starting to rise again. So we need to see it get through that $1 mark really and move up, which it could do. There's a gap up here on the weekly, so it may rise to fill that soon. So looking interesting there. Now we've got on the list next, Mike, Wesfarmers. Wesfarmers, we talked about this on the show as well. It's gone through its all-time high last week, which is a great sign for Wesfarmers. Really good things happening at Wesfarmers at the moment. However, it's a really nice angle. Look at the angle of that trend. Nice trend line up underneath there.
Isn't that perfectly low risk, easy to trade?
Wesfarmers is, but it had a really horrible run through here. So its personality changed. And this is why we say you can't just assume that just because you've had a profit on a stock before that it's going to be good in future again. So have you finished with the chat? Did you want to talk about anything else on there?
Yeah, there's a couple of other things we can look at. There's more stocks we've got. So have another stock, because you had Newcrest. We've already talked about that. How about we go to Wesfarmers? We just did Wesfarmers. Go to Origin.
Okay.
That was for Gregory.
So Origin, I think Origin's a good one. We may have actually talked about Origin as well, actually. Origin, actually, this month, if you look at it, the close is low on the bar, but it's still part of this sideways move at the moment. Last week's bar was a bit interesting in terms of the range. So 60 cents down on the stock, which broke, and it just looked like it was trying to break through this low, but hasn't done yet. Okay. So it may actually find support. But I think we said previously that we like to see the stock move down a little bit and then see if it can make the next move up. So still in a holding pattern there for Origin.
Cool. Now there's a question here. Now Rosie asked one about, is our course online or is it face to face? It's very interactive online, and you get Janine and I, as you saw, and our team of people to work one-on-one with you. But give us a call tomorrow and we can have a bit of a chat, Rosie. I don't want to talk about it tonight. But we had somebody ask a question about, is there any sort of cheap software? Andrew Hunt, he says, hi Dale and Janine, completed your diploma of share trading and investment 2015. Okay, that's not the question. Enjoying your show. Do you have a similar webcast for US shares? I'm thinking of doing a top 10 or top 20 stocks for the US type recording with Janine, and I do intend to do a show like this just for US, but it's too early. We've just launched syndicated radio interview across 25 stations across the US, so but it's probably
so they can watch that on the YouTube channel, can't they?
Yeah, they can watch that on our YouTube channel. I got launched the video of it, but there was somebody asking about some software. I'm just saying it's basically software for fundamental and technical analysis, and it's cheap. Now, I can't find it there, so I won't keep looking at it. But software that's cheap, if you don't not properly educated, then a software like Optima is overkill for you, completely overkill. But there's some free stuff on the web like bigcharts.com or incrediblecharts.com that you can do some basic analysis in. Software is not your answer. Number one, you don't buy the tool before you know how to trade.
I think
properly.
I read Warren Buffett's book initially on looking at the fundamental side of it, and I disconnected the fundamentals with the technicals, because often the software providers who provide these, the packages to do the charting and analysis, they're not experts in the fundamental side of things.
Yes.
They're experts in the charting. So it's like anything. You go to an accountant to get expertise on tax questions.
Yep.
You work with us portfolio managers. That's our expertise, and our teaching is part of the expertise. So when it comes to the software, if there's strong technical analysis, then that's what I go to them for. And fundamentals can be separate. It doesn't really. I don't really need to have it all in the one package, in my opinion.
I just think it's you're not going to get a great package cheap.
Yeah.
That's going to do both of those.
And do it well.
We'd get a lot of our fundamental type stuff out of Morningstar. So you go to Morningstar and the Bloombergs, and you can.
A lot of our students use Morningstar.
Yeah.
A lot of them use the brokers' websites.
Yep. ComSec has a lot of fundamental stuff. And really it's about what are you looking for in fundamental, and having a process and strategy there. But then some good charting software. But if you're not highly educated like our students are, then stuff like, as I said, Incredible Charts or bigcharts.com are very, very good. Getting a cheap software package for technical analysis, pretty much it's just going to have some indicators in it, and it's probably not going to help you unless you really understand what you're doing. It's sort of like giving the keys to a Ferrari to a 12-year-old.
But at the same time, like when I think about a car analogy, I'm not going to start with I'm not going to start with an old Mini. I want, if I'm serious about this, then I want something that's actually going to last me,
correct,
a decent amount of time. And a software provider that I know has got reliable data. That was one of the big things in the beginning. Yeah, so I researched a lot of the software providers just came to us and said, here's our software, and we had a look at them all.
How many did we test?
That was a long time ago. And so like Optima, I found, or Market Analyst, happened to be the best out of the lot as far as we're concerned, and they're Australian. And
you get it with our course. So enroll in the course, you get the software
included.
Plus you get Janine, remember, so that's really cool. I'll share her with you, that's fine. I get her all day long, so you can have her for an hour on the phone or whatever it is that you got to do. So we've got about maybe 5 minutes because we started late because
we've got Northern Star Resources was another question on the list.
So we've still got Northern Star from Gepert, and then we've got Rosie wants Bank of Queensland, and there's a couple of others that we'll cover before we finish the show, guys.
Rosie's always asking for good stocks.
Rosie's asking for great stocks, isn't she?
So I'll go to Northern Star Resources first, and then we'll coming over here. Look, you can see it's just gone up. Northern Star Resources has recently gapped up. Remember, Dale was talking about how prices often blow off at the top, and we're seeing that could be happening right now. So we've got this sideways consolidation move, gone to a new all-time high, may pull back to find support. So if you're in the stock now, obviously there's no sell signal on the chart because it's still moving up. So it's about letting your profits run, as Dale was talking before, and waiting for a legitimate exit signal. But I'd be just watching to see what happens and how quick the stock fills this gap here, whether it finds support around 960, because remember, it's also gone through a whole dollar value at $10. Stocks will often, when they hit certain levels, will often pull back. Like it hit this one here, it hit around $6 and pulled back. Another one here at $10. We saw one here at, this was back in November 2012 at $1.60, so that sort of bucked the trend there. What do we have here? There we've got 191. So there's the $2 mark again, 2, 6, 10. Now, what do you notice about that? I've just taught you something that I'm not going to tell you what I just showed you, but that's an interesting.
I was looking the other way.
That's a really interesting part of looking at any stock. This is what gives you levels in the blue sky to determine how far a stock may rise for its next major pullback. So then let's go to BOQ. Now BOQ is still strongly down. I mean, this was a really popular stock for a while, and when it does trend, it trends beautifully, and it does tend to lead the big banks, but not so. And look, my theory has been on that the smaller banks actually bagged the big banks during the inquiry, so, the Royal Commission. So you know, straight away after that happened, then the two smaller banks got sold down at the same time. And I just thought, yep, okay, just remember, boys, they've got more money than you have. And then we saw the bottoming out of BOQ so far. 3 lows here, all at the same level. So what does that tell you? That's a pattern. And if the stock happens to break through that low, then it's going to keep going, obviously. If it manages to break above about $9.50 and do that strongly, then we could see it move up really nicely. There's a gap on the weekly chart to indicate it could, and another level up here at about 1073. So I don't think it's an opportunity just yet, and that would be getting in early too, by the way, taking that move. The alternative is follow Dale's thinking in his book and grab a trend line, put it down here and see if you can apply the steepest line. It's always about the steepest line, and then it's still under that trend line.
It's trading. A lot of people looking at stocks that are trending down are trading to not lose.
Yeah.
And we've got Terry Chen saying, does Costa, is it worth a mid to long-term investment? Costa's falling like a rock. Like, seriously, you shouldn't even be looking at the stock. It's falling like a rock. Don't catch falling knives, you get cut. And it's the same with AMP that we're talking about and other stocks. And people constantly talk to us about, oh, can I buy this? It's cheap now.
Yeah.
And we're looking at these stocks that are falling away and falling away. Unless a stock is rising, don't ever look at it. If it's falling, then the probability is it's going to continue to fall. And eventually it won't. But at that point, then it'll start giving us some levels of support. It'll show us how strong it is, and it'll start to tell us. But we need to buy stocks that are rising. If you're buying a stock that's doing that, then you're going to lose a lot more than you're ever going to win, and it's going to cost you a lot in lost opportunity and lost profits, as we were saying before. Never, ever, ever, ever buy a stock because you think it's cheap. Always buy it because it's going up, and it's told you, it's proven it's going up. And that's why we always talk about trade on confirmation.
So
not
why do the
speculation.
stocks keep falling then?
Well, because nobody wants them, and people are getting out, and you get
Shorting.
exhaustion phases where people are just panic selling now because they've lost a lot of money. So, because you get those people that hang on and hang on and hang on and hang on, and then all of a sudden,
what they don't tell
sell.
you is that the big fund managers will be buying it off the super funds.
Yeah.
So they'll be getting the super funds get a clip. They say, for instance, you've got money in a super fund, you may not even know that this happens. And then the super funds hand over the stock to the short sellers, the big institutions. They continue to sell the stock down with a view that they're going to keep selling it down. The super funds know that this goes on. And what does that do for your super fund? You know, it just means it makes it much more volatile.
I've enjoyed tonight.
So before we go, I want to leave you with a thought on building your wealth. So this is a quote from Dale's book, actually from Dale himself. Short-term trading should only ever be used to complement your medium to long-term portfolio. Now, this is the clincher. It should not be the catalyst for building your long-term wealth. Think about that.
People do that all the time. They do the opposite, don't they?
Okay, so if you've enjoyed tonight's show, remember to share it on your social media with your friends and colleagues, and you'll be helping someone else learn each week. Also, make sure that you put this show on your calendar and be back online next Tuesday at 7 p.m. If you cannot be with us live next week, we'll miss you, don't worry. Remember, we're happy to receive your questions at any time, so send them to info@wealthwithin.com.au and just type Wealth Within Live in the subject line. Dale,
Well,
that's it, isn't it?
That really does bring us to the end of the show, and we really do hope you enjoyed it as much as we have. We've had a lot of fun tonight, and hope
We
you've
tried
had
to
too.
pack as many stocks in as we could.
Yeah, I think we need 4 hours, don't we? As always, thank you for taking part, and we hope to see you again next Tuesday at 7 p.m. But for now, goodbye, good luck, and good trading.
Good night, everyone.